Hi everyone, Jack Gear here. Following on from episode 2, episode 3 of Mortgages on Paper is going to see us compare the difference between trackers and discounted rates and the pros and cons that come with each. Let's go. So, the first variable rate you will usually come across is the tracker, or the base rate tracker. It simply means that whenever the Bank of England base rate changes, your rate will change too. A tracker will usually stay a fixed percentage above the base rate, for example 1%. So if the base rate today is 3.5% and it jumps up to 4%, the rate you would pay on your tracker would be 5%, and so on until the end of your deal. So although it's your lender that you are borrowing the money from, it's the Bank of England that is influencing your rate. Now, a discounted rate is different. Although it's still variable and can change like a tracker, what affects the change in your rate is not the Bank of England, but the lender or the bank or building society that you are borrowing from. All lenders have what they call a standard variable rate, or an SVR. This is like a default rate that you would end up on if you had come to the end of your current deal and didn't remortgage or choose a new product, and it is usually higher than the deals that you could choose from. Unlike the tracker that sits above the Bank of England base rate, the discount rate sits below the lender's SVR. So if the lender's SVR is 6%, you might be on a 1.5% discount deal, which gives you a mortgage rate of 4.5%. In the same fashion as the tracker, when the lender's SVR goes up or down, your rate will follow it in line with the discount that you have. To summarise, both run the risk of uncertainty, but in today's market are around 1 to 1.5% lower than the typical fixed rate deals. When you decide between the two, you just need to understand who and what is impacting the movement of your rate, the lender or the Bank of England. Make sure you speak to your broker about these options and are confident that you're going with the right deal. There are plenty of other details involved with mortgages which we'll be covering off in future videos, so make sure you follow the page for more mortgage content.